Did you know that 90% of the world's millionaires invest in real estate? Well, I'm Angel with the Academy Presents Real Estate Investing Rocks, and I'm here to help you if you want to go for your piece of that pie. This is kind of me personally, but I resigned from my W-2 on February 18th of this year.
Congratulations.
Thank you. And I have been doing summits and webinars and going to events and meeting people and just networking. How do I document what I'm doing so that I can be considered a real estate professional?
How you document everything in your life right now? Post on Facebook and Instagram. That's how, I'm joking. You know, I'm sorry, but that's how most people
okay.
I looked at your face and you were not smiling, so I had to clarify. No, I wasn't serious. Okay, so how you document anything for this guy? Okay, because here is, I want to make distinction, because who you are documenting it for? Are you documenting it for me? If I'm doing your taxes, or are you documenting it for him? For me, or like, I'm not saying literally me, but I'm saying is, if you are looking is, what do you give to your tax person? Your tax person's job is not to verify your data. Your data has to be reasonable, but we as tax professionals are not going to ask you to show receipts. If you come to most tax professional and tell you is, okay, look here, I spent last year $10,000 on marketing. We are going to put on the tax return 10,000 marketing. We are not going to ask you, show us every receipt. I don't trust you, Angel. I don't think you spent 10,000 on marketing. No, if I don't trust you, we simply don't work together. It's as simple as that. But I'm not going to make you prove anything to me. I'm going to ask you a question if you are saying something unreasonable. Unreasonable to me would be you're a new wholesaler and you said, yeah, I made 10,000 in income and spent 100,000 on marketing. To me, so you are trying to tell me you make 10,000 and spend 100 to make 10,000. That doesn't make common sense. And maybe that was, some people are in that predicament, unfortunately. But I'm going to ask you if things do not make sense. But if they do make sense, if you tell me the opposite, if you tell me I made 100 grand in wholesaling and spent 10 on marketing, I'm not asking you to prove me the 10,000. Okay? Now, but one day he may want you to prove it. So that's called an IRS audit. So if you get a letter from the IRS saying is, we want you to prove it. And I teach classes often on IRS audit flags. There are just a lot of things that you should not be doing on your return, which was exactly my example. You see, my example was 100,000 in fees, 10,000 on marketing. If that's literally what you put on your return, and people do that, like I have seen returns signed by CPAs, which literally say, I made 100 grand and spent 10,000 or whatever, 50,000 in expenses, rounded to the next 10,000 mark. Anybody, including him, including Uncle Sam, you know, looks at that and saying is, nah, you just estimated that. That's a guess. And when you have rounded numbers, everybody knows. You know, I know, he knows. That's a guess. That means there is no documentation, no support. You are asking to be audited. And when you are audited, you say, okay, now show me these 10,000. So this is what they want to see. For every expense, they want you to prove 4 items. You need to keep track of 4 items. And they're simple. Those 4 items are when, how much, to whom, and why. When, how much, to whom, why. So what you have to record is today, and we are doing this recording on June 11th. So, okay, on June 11th, 2020, I spent $254 buying office supplies. So your recording is when, 6/11, how much, 254, to whom, to Office Depot, why, office supplies. Now you recorded all 4 things. And missing one of these items is the biggest problem, because people ask, well, I can just print my bank statement. Bank statement or credit card statement shows you the first 3. It shows you when, how much, and to whom, but it does not show why. And IRS requires why, because just because it says Home Depot does not mean that it was for business. You can buy anything in Home Depot right now. You know, it could be for personal purposes, and it could be completely random stuff. Like, I'm amazed at some of the items Home Depot carries these days, and I'm saying it's not related to home improvement at all, and they have it, you know, clean. So yes, that's what you basically have to record. How is up to you. There are way too many systems. You can do it on paper the old-fashioned way, like pen and paper. It works. You can put it in Excel spreadsheet. It works. You can put it in one of the expense tracking apps, like gazillion of apps on your phone record that, like tons of them. Expensify, tax, bot, you name them, huge amount. You can put it in QuickBooks. My suggestion is don't put it in QuickBooks. Why? It's an extremely complicated system. It's great system, but you need to know how to use it. And in real estate, it's not ready to be used out of the box. You need to customize that. So in my company, we created our own proprietary bookkeeping system specifically for real estate investors. We customized QuickBooks for real estate investors. And we have seen that's actually a huge problem, because a lot of our clients over the years, and I'm reminding people, if you missed my introduction at the beginning, you know, I'm Michael Plaks, and I'm black belt in real estate taxation. I work with real estate investors for 25 years, real estate investors only. And they go and hire bookkeepers, professional bookkeepers with credentials, and ask them to do bookkeeping. And we see those results, and it's complete trash. And they're saying is, but I hired this firm, and they're certified QuickBooks advisors, and they help hundreds of people. Yes, and they produce trash. Why? Because you're a real estate investor. Real estate bookkeeping is different. So unless you have professional help to customize QuickBooks, stay away from complicated accounting software like QuickBooks. Use something simple. Use a, if you don't want to have professional system, use expense tracking apps. Those are simple. They will not do the complete job, but they are simple. QuickBooks is confusing, complicated, and you are likely to waste a lot of money and time doing that. And then you come to a tax person and we will tell you, we cannot use that, it's garbage. Sorry. So that's why we created our own sophisticated system if you are at the level where you're ready to use real professional software. By the way, I'm anticipating a couple questions. Do we sell that? No, we do not sell that system. That system is only for our advisory clients. And we do not sell it because you cannot use it without professional help, really. You know, you need our support in order to use that system. So can we buy something like that on the market? No. I have seen people who sell those systems, and those systems are not adequate. I'm sorry. There are a couple real estate bookkeeping systems on the market, and none of them fits the bill as far as we are concerned. That's why we ended up developing our own. But again, do not overcomplicate that. Don't buy QuickBooks. Get a, if you are a new investor, like all you have is couple rental properties, use an expense tracking app, but make sure, I said 4 components when you asked your question. There is actually a 5th that I need to add. The 4th and 5th is specific to real estate. So normally 4 again. How much, when, to whom, why. And when you're in real estate, number 5 will be for what property. If you have multiple property, you have to record which property that expense was for. That's critical. So that's it.
Okay. Well, I do have one more question.
You said 2. I'm sorry. No, 2. Okay, no.
Okay, one more.
Number 3 will be on the next call. Yes. Go ahead, Angela.
Okay, so like we're kind of transitioning. My husband still has W-2. Of course, I resigned. So last year we had was it bonus depreciation?
Okay.
But neither one of us was a real estate professional. So the bonus depreciation can only be deducted on the passive income received. Does it have to be the properties that are associated with the deductions, or can it be some of our other rentals as well?
Okay, so that needs to be question number 11 on my yes, no questions. No, it goes along those lines. It's a good question, you know. Thank you for bringing that up. Unfortunately, it doesn't have a yes, no answer. Okay, so
Okay.
it will take me like 5 minutes to go through that, which I'll gladly do. I'm just warning you. It's not something super simple that we can just knock out instantly. So your question combined a few things together, and I will try to break them apart. So first you're saying is, what is bonus depreciation? Bonus depreciation is a form of depreciation. And example is, one of my questions was, can you deduct appliances when you buy it for rental property? Okay, bonus depreciation is one of the methods to do that. So you can just saying is, okay, I have appliances, I can apply bonus depreciation. This is what it means. You deduct full cost, 100% of that right away in the first year. So you changed carpets in your rental property. You can apply bonus depreciation, meaning is deduct complete cost of new carpets on your rental property. And there are like a lot more things you can do. So what it does is you have bigger depreciation deduction. So next step, what is bigger depreciation deduction does? If you already had a loss, you have bigger loss. Then the question is, okay, how much income you had? Like the first question we discussed, if you had 200 W-2 income and you guys are not real estate professionals, then you cannot take that loss. Small or big does not matter. So your bonus depreciation increased that loss, but it's still locked. So in your particular case, like just looking at your family, so your husband still has full-time W-2. Can he qualify? He cannot because of his W-2 job. What about you? You quit in February. So you have 2 months of full-time job and 10 months of being full-time in real estate. So you will end up spending more time in real estate over the next 10 months. Not the next 10 months, like I mean 6 months left, but you already spent 4. So you have 10 months this year of real estate, which will take more time than 2 months that you spend in your old job. So you will probably qualify. There are other tests that you will need to pass, but my presumption is you will qualify for that year. If you qualify, your husband is qualified automatically. That's one of many benefits of being your husband. You know, tell him, you know, he gets to be a real estate professional, you know, just essentially using your qualification as his. Okay, so you guys will qualify that. So this year you can, last year you cannot. So if all of your losses were this year, if you use depreciation this year, yes, you can take as much as you want to. If you took that bonus depreciation last year in 2019, last year you did not qualify as a real estate professional. So those losses would be locked up. Like you can use losses from one property against income from another, you know, all together. So you get all the income from all properties minus all the losses. But if the result is negative, you can only take it when you're a real estate professional or when your income is low. You know, if your overall income is low or if you're a real estate professional. So your income is probably higher than the threshold combined income, but you're a real estate professional, so you don't care about that limit.
Yeah, but last year, we're still going to get a hefty tax bill.
Last year, yes, it will not help you for last year. I will have a little bit of more bad news for you is this. Just because you're a real estate professional this year, it will allow you all losses for this year, but you won't be able to take last year losses still. Last year losses remain locked. You can take everything you want this year, but not last year's losses.
So we can't roll over from last year?
It will roll over, but it will still be locked. You will have 2 tracks. Last year you were passive. You were not real estate professional. And that passive track stays locked. You cannot unlock it until you sell it.
Well, so that stinks.
Well, here is the thing. I'm sorry to make your pain bigger, but I will use it as a point for our presentation. Because like, guys, is okay. It's possible, again, I don't know your circumstances, but it's possible that you inadvertently made a mistake and shoot yourself in the foot. It's possible. So if that's what happened, at least I want other people learn from that mistake. Because if in 19 you could not qualify, but in 20 you could, you did not need to take all of this extra depreciation last year. You wanted to push it in 2020 and take it this year when you could benefit from that. It's called
We may still be okay because we haven't filed our 19 taxes yet.
Okay. Here
So
we
this
go.
is helpful.
Okay. Yes, but this is a tax planning issue. You know, you need to push things into the year where it's beneficial. That's the difference between tax preparation, like most people, most firms do tax preparation. Tax preparation is documenting history. That's what already happened. Tax strategy is something you do forward, tax planning. That's what people like us do. We are helping you decide, make decisions instead of just recording taxes. And in your case, yes, you want to push everything you can into 2020 because your losses will not be limited in 2020. Tax losses. I have to clarify myself. I hope your losses will be limited. Your tax losses will be unlimited.
Yeah, no, we want to get that tax liability to zero.
Well, again, you are prompting me to continue talking and stop doing that, or we will never close the call, right? But I have those debates sometimes. When I teach class, I don't teach live classes these days, not just because of Corona, but you know, pretty much all teaching I do right now is virtual, like I do webinars. Back when I used to do presentations, classes with live audience, okay, what I would do is I will tell story of a client of mine and then ask question to the audience. So the story goes like that, real story of a real client who might be listening to me right now. And if you are, and you know who you are, you know, but one of the big investors, one of our clients. So I'm calling him after we finished his return and telling him, okay, you have to write to the IRS 70,000 check. Yes. Okay, so like we discussed them. So at the end of the call, I'm saying is, so do you have any more questions? Like after we discussed it, he says, no, I just need to go and drown myself now. Okay, and to me then I ask my question, so who wants to be in his position? And nobody raises their hands. I'm saying is, okay, who does not want to be in this position? Everybody raises hand. I don't, and I'm saying is, guys, you're missing a huge point there. If the guy wrote $70,000 check to the IRS, can you figure out how much money he made?
Oh yeah.
And so where do you want to be? Zero tax liability or 70,000 IRS check? Well, if you made $1 million, you want to write a $70,000 check to the IRS or $300,000. I will write 300,000 check to the IRS if I can make an extra $1 million. Show me how I can make extra $1 million and I will agree to write him 300. No, would I rather write him 200,000 check? Yeah, absolutely. I will try to do everything to bring it down. But I will write check to the IRS and not be upset about it if I made enough money.
Yeah.
Okay?
No, if 300,000 is the minimum that I could have possibly owed, of course. All right, because it means I made enough money to owe that. Fine.
No, I had people who are saying, I'm not going to do wholesaling because it's taxed like up to 45% of that. And am I crazy to give Uncle Sam and state and Social Security 45% of my income? Am I crazy? I think, no, I think you are crazy to decide not to make money because of that.
Yeah.
Because you are still keeping the 55. Are you better off not making any money just because you won't share with the IRS? I think it's crazy thinking. Now, if you're thinking is, do I have a way to make money in a better way? Maybe. That's a good question. So instead of wholesaling, do I have other ways to make money which is not taxed as high? Yes, let's talk about that. That's a good way to think. But when somebody says, I'm not going to do that, there will be too much taxes. I cannot agree with this thinking. Just cannot agree. Look for ways to minimize your taxes, look for tax efficient ways to make money all day long. And I will help you find those ways. But never say, I'm not going to do that because part of that goes to taxes.
Yeah, well, and it just kind of boils down to like what you were saying earlier, is you want someone that's got the whole picture. You want your
Absolutely.
strategist, you want someone that's going to help you in the books, you want someone that's going to help you do your tax returns. But really, it's that whole picture. Because if you don't have someone that's helping you figure out your tax strategy that's going to be the most beneficial for you, then you're going to make mistakes along the way.
Yep.
And most of the time, they're going to be very costly.
Okay, you are hired as our spokesperson.
Well, it's just so, I've just learned so much since because I went full-time into it February. My husband and I actually both come from families that had backgrounds in real estate. So we both grew up in real estate, but it's been a crash course since February when I decided to go full-time into it, because I have just learned so much. Like, even when it comes time to market, find somebody to help you, because they're going to know all these other channels that you had no clue about.
Mm-hmm.
Like, I do Facebook and I can do YouTube. I don't know about podcasts. I'm not a good marketer. My primary page can't even run ads anymore because it got shut down on the ads part. I mean, I don't know enough, but I know enough to say I don't know it. So I'm going to hire somebody to help me. And I think that a lot of times when people start out in real estate, they think they have to do it all on their own. And you don't. Even if you think you can't,
yes,
yeah,
100%.
even if you think you can't afford it, what you really can't afford is the cost of the mistake.
That is
so
true.
Figure out whatever
Very
you
true.
got to do.
completely agree. Both as a person who, advises our clients in growing their real estate businesses, and also myself as a business person who has made that mistake myself, like trying to do things myself instead of getting help and and asking people who know better than I do.
Yeah. Well, and
been there, done that.
Yeah, and I mean, I don't think it's a pride thing. I think it's, you're trying to be efficient, you're trying to save money, and like, especially in my case, I was ignorant to what there was. I had no clue about how to do things. And so it was foolish of me to believe that I could run things on my own. And I think that just as people entering into real estate investing and people entering into, say, an educational platform or into offering courses or developing courseware or software, you just have to sit back and say, wait a second, I know there's somebody out there that's smarter than me on this. And just start reaching out, because the coolest thing about this space and the people who fill this space is how helpful they are. It's like, I want to help people. I'm here with an educator heart, wanting to share information. You want to help people.
Yeah, you're doing a great job helping.
And you want to help people. You want to help people get information out there and teach them about the taxation portion of it, and just basically CYA, cover your butt. And I've been amazed at the quality of people in this space and how much they want to help. And all you have to do is ask. So.
That's true. That is true. Thank you very much, Angel. Really enjoyed being on your show, and I wish you and your husband a lot of success in your real estate business, and I'm sure we'll meet again. So thanks.
Hopefully. All right. It was awesome talking to you. Thank you for being on the show today and for sharing this amazing information. And hopefully everyone that gets to see it will get something out of it, because I know I certainly did. So thank you for joining us.
Thank you very much. Bye, everybody. Thanks for listening.
Have a great day.